Hi everyone, this is Akash and welcome back to your own channel where we talk things related to stock market. In today's video, I am going to explain you a very simple option buying pullback strategy which can help you make consistent return. Yes, the reason I'm very confident about consistent return is that the average amount that you'll make in a winning trade is much more higher compared to the average amount that you will lose in a losing trade. So without getting any further delayed, let us start directly with the strategy explanation. Now, few things that you need to understand regarding this strategy is that we are going to apply the setup not on the spot chart, not even on the future chart, but directly on the option chart. That is the strike price where you are going to actually take a trade. That is the chart where you need to apply this particular strategy. Obviously, then the question arises like how do you select the strike price? The answer is very simple. For Nifty Bank, you just have to select a strike price which is having a premium very close to 150 rupees, right? Now the price can be plus or minus 20 above 150 or below 120 or below 150, that is tolerable, but it should not be more than that. So the first idea of selecting the strike price is very simple. You select a strike price whose premium values are roughly in the range of 150 plus or minus 20. I hope that makes very clear sense. Now once that has been done, right, what you need to do is you need to apply two simple indicators. Now let me show you how do you do that. But before that, let me just select one strike price. Let's say I go for this particular strike price of call option, right? And you can go for call option as well as put option, whichever direction you think the markets are moving or not moving. That doesn't matter. You just simply keep on selecting the strike price which are having roughly the price of 150. So I can see roughly this was having 150 price. Once you have that particular strike price, you need to do what you need to do is you need to apply one RSI indicator and the other indicator is Bollinger Band. Now once these two indicators are applied, take a note that you have to apply them with their default settings, and the time frame on which we are going to apply this strategy is a 5-minute time frame, right? So with all these things ready in our example, let us understand how you take an entry. So for taking an entry, first you need to get an alert. The alert will be given by your RSI indicator. As soon as your RSI indicator gets into the oversold region, you should start observing that particular contract. So over here we can see at this particular level over here we can see the RSI actually became oversold and the price was actually roughly closer to 150, that is 166. So just 10-16 points above, this is tolerable, doable. Now once you get this kind of condition, right, where RSI has become oversold, see whether the price is also trading below the lower band of Bollinger indicator. So yes, we can see the price was also trading below the lower band of the Bollinger indicator. Then you need to find or take an entry on a candle which is closing slightly above the Bollinger band lower indicator. So this is the candle where the price just closed above the upper part of the Bollinger band. So what we are going to do is we are going to simply take an entry over here. Once we take an entry, the stop loss should be placed at the low of the same candle or the low of the previous candle, whichever you feel comfortable. Now one good thing about this particular strategy is that the stop loss in this particular strategy will be very tight and very small. So if you're just a beginner, trust me, this is really going to help you to be psychologically very stable, because even if the stop loss is getting hit, the loss will not be very high. Now once you take an entry for target, there are two ways. The first way is that as soon as the price reaches the median level, you can book your complete profit, which will most of the time will give you at least a risk to reward ratio of 1:2. If you don't think that this is a good point to book your profit, you can also book your profit at the place when the option premiums are touching the upper Bollinger band. Now mind you that it's always better to keep on booking profit for an option buyer, because theta is not working in our favor. So it's always better to either book a partial profit over here or a complete profit over here, depending upon your overall market view. I believe that in the beginning, if you're just starting with this strategy, keep on booking your profit at least median. As and when you get much more comfortable, much more skilled enough in this particular strategy, you can focus on either trailing or partially booking at the median level and booking the entire profit at the upper band. That is how you can go along with this particular strategy. Now what we'll do is, as of now we have taken just one example of a call option. Let me also show you one more example of a put option, right? So what I can do is, I can just again go to option chain, and let me just randomly select, let's say, this particular chart, 43,400. I have selected this particular chart, right? And over here, let us see the conditions where they got satisfied. I think here the condition, RSI condition, was getting satisfied, but we didn't had the condition of, price actually closing below the Bollinger Band, so we will not take this into consideration. This is the place where we got the condition, both the condition got satisfied. So over here RSI was oversold, the price was also below the lower band of the Bollinger indicator, and the next candle or the follow-up candle actually closed above and into the Bollinger Band lower part of the Bollinger indicator, right? So what we'll do is, we'll take an entry over here, right? The stop loss will be obviously the low of this candle or the low of its previous candle. Now in this example we can clearly see the stop loss actually got triggered, but even if that is the case, like I said, you will not be losing more than 10 to 20 points into this particular setup. And we know that losing 10 to 20 points in Bank Nifty is pretty obvious, and it's doable, not something that we should be really afraid of. So this is how this particular strategy works. Let me see if I can get few more examples for you guys into this example. Let me just open one more option chain. Let's say we go to this particular option chain, right? Yeah, so the data is available with us. So yes, over here we can see the RSI was actually oversold, right? The price was also below the indicator, the lower part of the Bollinger indicator. Then it remained continued over there, and this is the point where price actually closed above this level. So what we'll do is, we'll try to take an entry over here, and the stop loss will be very tight, will be either at the low of this candle or the low of previous candle, whichever you feel comfortable. And the first target obviously is the medium level, so we can see the target got hit. So normally guys, this strategy works really well, and you should be at least be able to get roughly around 1:1 or 1:2 any day into this particular strategy. Here also what we can see is that the strategy got triggered, right? And we clearly, this actually happened last Friday, right? So we can clearly see, let me just remove all the drawings. So we can clearly see this is the point where we got an entry, and after the entry we can keep the stop loss at over here, and the first target will be obviously over here. If you're not comfortable, if you want more higher profit, if you think the momentum is still there in the particular strike price, what you can do is, you can either book partial profit over here and the entire profit over here, or simply trail your stop loss at the median level of the Bollinger indicator. So this is how simple this particular strategy is, nothing very complicated. I think here also the strategy gave the signal, but ultimately the stop loss got triggered. That's completely fine, not an issue. So it's a very simple strategy. I think we have covered this particular strategy in less than 10 minutes, but the skill part of this particular strategy will take some time for you to apply and learn. So do let me know in the comments that how did you like this particular strategy. I'm also sharing a group to a WhatsApp application, WhatsApp chat, so that we are building a community where I constantly keep on sharing my trading ideas and all the educational material that I keep on developing for each and everyone. So if you are interested into learning and earning at the same time, do connect with us on that particular WhatsApp group. And in case if you have any other questions, do let me know in the comments, and I'll be more than happy to answer your doubts. Thank you everyone. This is Akash signing off. See you in the next video.